Good day, everyone, and welcome to the Blucora third quarter earnings results conference call. This call is being recorded. With us today from the company is the President and Chief Executive Officer, Bill Ruckelshaus, Chief Financial Officer, Emans, and Senior Director of Investor Relations, Stacy Ybarra. At this time, I would like to turn the call over to Stacy Ybarra. Please go ahead, ma'am.
Good afternoon, and welcome to Blucora's investor conference call to discuss third quarter 2013 earnings. Before we begin, I'd like to remind you that during the course of this call, Blucora representatives will make forward-looking statements, including but not limited to statements regarding Blucora's expectations about its products and services, outlook for the future of our business and growth initiatives, and anticipated financial performance for the fourth quarter of 2013 and for tax season results in 2014. Other statements that refer to our beliefs, plans, expectations, or intentions, which may be made in response to questions, are also forward-looking statements for purposes of the safe harbor provided by the Private Securities Litigation Reform Act. Because these statements pertain to future events, they are subject to various risks and uncertainties, and actual results could differ materially from our current expectations and beliefs. Factors that could cause or contribute to such differences include, but are not limited to, the risks and other factors discussed in Blucora's most recent quarterly report on Form 10-Q on file with the Securities and Exchange Commission. Blucora assumes no obligation to update any forward-looking statement, which speak only as of the date the statement is made. In addition, during this call, our management will discuss GAAP and non-GAAP financial measures. In the press release, which has been posted on our website and filed with the SEC on Form 8-K, we present GAAP and non-GAAP results, along with reconciliation tables and the reasons for our presentation of non-GAAP information. We have also provided supplemental financial information to our results to the investor relations section of our corporate website at www.blucora.com and filed with the SEC on Form 8-K. Now I'll turn the call over to Bill Ruckelshaus. Following his comments, Emans will review the third quarter results and fourth quarter outlook. Then we'll open up the call to your questions.
Thanks, Stacy, and good afternoon, everyone. In the third quarter, we continue to build on our momentum and execute. We delivered growth in our operating segments, and we were thrilled to add Monoprice to our portfolio. Our performance in the quarter reflects the strength of our individual businesses, the benefits of our diversity, and the focus of our team. Search revenue for the quarter was up 18% over the prior year, driven by growth in our owned and operated properties and new partners in our B2B distribution network. Our software partners continue to adjust to the revised Google guidelines, and revenue has declined overall in this segment as expected. We anticipate some, though not all, of our partners in the software space will be successful under the new policies, and growth will resume for them in the next quarter or so. In other areas of search, we've had a number of pleasant surprises, including better-than-expected pipeline revenue and growth in our owned and operated sites. We have continued to improve the user experience on our O&O sites and remain committed to further investments in marketing to ensure this progress continues. At InfoSpace, we remain focused on consistent revenue growth and profitability. We still see opportunities to grow in this market, and we continue to deliver content from multiple engines to a diversified partner network. Turning now to our tax prep business. We are pleased with the progress the Tax Act has made in preparation for the upcoming tax season. This year, Tax Act celebrated its 15th anniversary. Since its founding, Tax Act has developed a loyal customer base and established a track record of sustained revenue growth and profitability. Today, the team is focusing on enhancing its core product in DDIY and building out its offerings in the assisted channel. Last off-season, we invested in site content and usability, mobile applications, and new offerings around tax filing. This year, we continue to invest in these areas, building online tools, mobile applications, and integrated solutions that benefit Tax Act customers year-round. So, we believe we are prepared for a successful season. Last season, consumers continued to shift to DDIY and to Tax Act in particular. We expect further migration to DDIY, driven by better software, mobility, enhanced service and content, and favorable demographic shifts in the filer population. We believe overall filers will grow about 1% this coming season and expect DIY units to grow in the range of 4 and 6%. Our goals continue to center around growing our share position in DIY and bringing more value to our customers. Moving to e-commerce. During the quarter, we completed our acquisition of Monoprice, bringing us significant opportunities in the large and growing online markets for consumer electronics and tech accessories. Monoprice performed according to expectation for the quarter, and our integration is proceeding on schedule. We like the team, and we are excited about the growth prospects of this business. The focus at Monoprice is on growing product assortment and increasing communication with customers through social media, email, and other channels. We look forward to sharing more with you about future growth and market opportunities on our next call. Before I turn the call over to Eric for more details on the financials, I want to thank our employees at all levels, InfoSpace, TaxAct, Monoprice, and Blucora. I am impressed every day by the hard work, passion, and dedication of our teams across the board. I'm proud of our achievements and confident that Blucora is well positioned for the future. With that, I'll turn it over to Eric.
Thanks, Bill. We have a lot to cover today as it was a busy quarter. I'll start off my comments with third quarter performance, then move to fourth quarter guidance, and end with financial expectation for our tax preparation segment in the first half of 2014. With that, let's get started. Consolidated revenue for the quarter was $124.1 million, and adjusted EBITDA was $16.6 million. Non-GAAP net income was $13 million, or 30 cents per diluted share. During the quarter, we recorded a GAAP net loss of $6.5 million, or a loss per share of 16 cents. The net loss was driven by the following. First, due to continued appreciation of our stock price, we recorded a non-cash loss on derivative of $4 million, or 10 cents per share. Second, we recorded a one-time, other than temporary impairment of an equity investment in the amount of $3.7 million, or 9 cents per share. And lastly, we recognized debt extinguishment costs of $1.6 million, or 4 cents per share, related to the refinancing of our TaxAct subsidiary debt. Normalizing for these changes and excluding stub-period revenue and segment income from Monoprice, which we will cover in a moment, we would have exceeded our net income and diluted EPS expectations for the quarter on the strength of our search segment performance. Our balance sheet remains strong. We ended the quarter with cash equivalents, and short-term investments of $248.4 million, and net debt of $18.3 million. During the quarter, we repurchased approximately 124,000 shares for approximately $2.5 million. Turning to our search segment. Revenue for the third quarter was $107.7 million, and segment income was $21.3 million, up 18% and 30% respectively from the same quarter last year. The search business growth was driven by better than expected performance from both distribution and owned and operated. Distribution revenue growth for the quarter was driven by new distribution partners launched in 2013 of $11.6 million, partially offset by declines in revenue from our existing partners. This trend was expected, as our partner network continues to diversify as a result of the downloadable application policy changes instituted in the first quarter this year. We have been pleasantly surprised with the business's ability to secure new partner relationships during the year and the ability of those partners to grow. Owned and operated revenue gained momentum in the quarter and was up $9.7 million versus the prior year, as we continue to invest in marketing to acquire new users. Segment margin for the quarter was 19.8%, benefiting from the growth of owned and operated revenue, which is a higher contribution margin, as well as mix shifts in our distribution partner network. Now let's move on to Monoprice. We closed the Monoprice acquisition on August 22nd, 2013, and the results of this business will be reported in our new e-commerce segment. Revenue and segment income for the stub period August 22nd through September 30th were $14.6 million and $900,000, respectively. It is worth noting that the stub period segment income was materially impacted by fair value purchase accounting. As such, it is best to look at this business on a pro forma basis, which we have supplied in our supplemental information release and can be found on our IR section of our corporate website. On a pro forma basis, for the third quarter, revenue was $37 million and segment income was $4.2 million, both up 23% from the comparable prior period. Segment margin was north of 11% and in line with prior year. Touching quickly on our tax preparation segment, revenue for the third quarter was $1.7 million, and consistent with the seasonality of the business, we recorded a segment loss of $1.6 million. Closing on the third quarter, unallocated corporate operating expenses for the quarter were $4 million, which included approximately $650,000 to transform and grow through business segment execution and through acquisitions. In the supplemental information provided on our website, we've included a schedule showing a pro forma view of the 12 months ending September 30th, 2013 for the consolidated company. It provides a snapshot of our financial profile, including the results for Monoprice, as if it was owned for the 12-month period. Some highlights. Revenue of $629.4 million. Adjusted EBITDA of $120.6 million. And non-GAAP net income of $98.7 million, or $2.31 per diluted share. Couple this with pro forma levered free cash flow of approximately $100 million, and the overall result we think reflects the progress we are making in executing our strategy. With that, let's move on to guidance. Starting with search, we expect fourth quarter revenue of $114 to $120 million and segment income margin of 18.5% to 19.5%. We are encouraged by our third quarter performance, which thus far has carried into the fourth quarter. With that being said, the search marketplace has evolved and continues to evolve, which can have positive and negative impacts on our search business. Thinking long-term about search, we remain focused on growing absolute segment income dollars. And while we are pleased with the business's rebound in the second half and the momentum we have entering the fourth quarter, we expect 2014 revenue growth in the low double digits given our current line of sight. As has been the case historically, our search segment results can vary, especially quarterly, and may be impacted by unforeseen external factors. Turning to our e-commerce segment, we expect fourth quarter revenue of $40 to $42 million and segment margin of around 11%. This represents 20% plus year-over-year growth for both revenue and segment income while maintaining segment income margin. For our tax preparation segment, we expect fourth quarter revenue to be a bit north of our third quarter performance and segment loss of $3 to $2.5 million. These expectations include the impact of a small strategic acquisition completed in the fourth quarter, as well as the ramping of marketing expenses we prepare for the 2013 tax season. We expect unallocated operating expenses of approximately $3.5 million and are likely to increase modestly into 2014 as we invest to support our growing portfolio of businesses. On a consolidated basis, we expect fourth quarter revenue between $156 and $164 million, adjusted EBITDA between $19.5 and $22 million, non-GAAP net income of $15 to $17.5 million, or 34 to 39 cents per diluted share, and net income of $2 to $3.5 million, or 4 to 8 cents per diluted share. Please note that our GAAP net loss, EPS guidance does not include an expectation for non-cash gains or losses related to mark-to-market derivative instruments. Also note that the impacts of such gains or losses are excluded from our non-GAAP financial measures. Before I turn the call over for questions, I wanted to provide some color around our financial expectations for the 2013 tax season. We expect tax preparation revenue for the first half of 2014 of $95 to $97 million and segment margin in the neighborhood of 52%. Okay, I think that's enough for me. Let's turn the call over to the operator and we'll take your questions.